Hello everyone, welcome to Elliott Wave YouTube channel. My name is Henry. Today is Wednesday, January the 8th. The time is around 5 a.m. GMT. So today we will be looking at the chart of the Nikkei Japanese index. This is a 60 minutes chart, 1 hour. Okay, and so in Asia session today, there is a piece of news about the Iran's attack on the US military base in Iraq, and we got some sell-off in the indices, but then since then it has sort of stabilized here. So in the Nikkei we saw this like decline here, and then since then it has stabilized a little bit. Now let's take a look here what we can expect here in the 60 minutes chart. Now if we take a look at the structure of the decline here, okay, now we can see that the proposed count that we have here is that this is an ABC zigzag, ended this cycle here, and you have a correction of that cycle, and then you have another 3 down, so it's a double zigzag. So this double zigzag hit the perfect 100% extension. Since then it has already bounced, right? So if anybody was playing the this hedging, what we call a hedging, when it reaches the inflection area, the blue box, then with the bounce here, technically if somebody was trying to buy at the first hit of the blue box, the individual should have been already with this bounce here, should have been able to create a risk-free position by immediately moving the stop loss to the entry level and maybe even take partial profit. All right, now what we can expect here is that this cycle ended, and then we can see some sort of a bounce in 3 waves or 7 swing. So we're calling a possibility of an ABC correction here. Then after that it can fail and then extend lower again in the Nikkei. Now first thing first is that the current decline from here, it doesn't look impulsive. The decline, the structure of the decline, it looks corrective. It looks like again a double zigzag. Now you might say, well, can we try to label it as a 5 waves? Then I think it is quite difficult to label this entire decline as a 5 waves impulse. You got a 1, 2, 3, let's say, and then this is if you say it's a 4, the 4 looks to be a little bit too big compared to your 2. If you take a look at the momentum especially, you will be able to see that this rally here in fact breaks above, it's pretty sizable bounce here, as you can see in the momentum. Alright, so that is telling you that this rally here is in fact most likely is another cycle that has nothing to do with this. So therefore an ABC is looking like a better count, and then from here you get a correction, and then you get another low. Alright, so you have 3 waves down and then another 3 waves down with a flat here in the expanded flat in the middle. Okay, so if we can sort of conclude that this decline here is corrective, then what we can conclude then is that despite all the news that we see about the war and so on, if it is really truly an impulsive bearish move, a new bearish move, like what many people try to pick the top, this should have been more impulsive than this and not really corrective, right? Nikkei and everybody else, not just the Nikkei, S&P and all the other indices, should have been truly like an impulsive structure without doubts, like a 1, 2, 3, 4, 5. But so far, at least in the Nikkei case, the evidence is not, is looking corrective so far. So that's why we think that despite the bigger pullback, or despite the pullback here, we still think that overall the larger degree outlook remains bullish. All right, now having said that, yes, a bigger pullback is a possibility, right? Even though the larger degree, again, based on the structure, it doesn't look impulsive, the decline, larger degree still remains to be bullish, but larger pullback definitely cannot be ruled out, and that's exactly what the chart is showing here. that we ended this cycle, we can have a bounce followed by another leg lower later on. Now looking at the larger degree of the Nikkei on the daily chart, we can see since it bottoms in 2018 December here, all we got so far is only a 3 swings. Right, all we got is a 3 swings and reaching the 100% and starts to reverse to the downside. And this cycle, at least this cycle looks to be finished. You can see it broke below this trend line here, and so it's starting to correct this cycle. So so that's why we expect a little bit bigger pullback to correct at least this cycle, if not the entire 3-way cycle, right? If not the cycle from here, then at least if not the cycle from here that is being corrected, then it should be in this cycle that is being corrected. But again, the decline, as we saw earlier, structure doesn't look impulsive, and that's why still most likely later on, if we do get a bigger pullback later on, most likely still gonna find buyers at the lower levels. All right, so this is what we're expecting now. Again, it's a 7 swing double zigzag. Finding support, may be able to get a bounce now in 3 waves, and then the bounce expected to fail and then extend lower again afterwards. All right, so I hope you enjoyed this video. Please do like and subscribe if you enjoy it, and also if you want to try our service, of course, we also have 14 days free trial. The link is provided in the description below. So thank you very much, and I'll see you all again tomorrow. Have a nice day, everyone.